face. How's everyone doing today? Hello, waiting for name 150. How are you? Today's the first day of the rest of your life, the beginning of the rest of your life. Let's have a great week together. We're all going to work our butts off to give you the best insight input for you to assess and work into your own trading plan. Hello, Ziggy. Twinkie Bear. Love you too, bro. Okay. This dollar break today is for real. You know, it's kind of been hanging on by a thread. It's constructive that euro is stronger than cable. I was looking for something in EG that still may happen, but it's going to take some time to set up. We had that real nice pullback last week. Let me get to it. Up a little bit here. But I just want to, this is just the way I think. And, you know, maybe I'm too jaded. I talked about this Saturday with some people that I collaborate with. And if you see this high right here in EG, the high was 90.92.5 on this platform. And this high was 90.98.6. Now, sometimes I get trapped into this thinking, but I would have been more bearish if they had made new highs, if this wick had cleaned out the buy stops here. So let me ask you guys if you think there are some buy stops or new longs looking to come into the market above this high. Now I'm thinking it's going to be an opportunity if we pull back towards 88.5 or so, 50, 61.8 back in here, because I do believe that they want to elect these stops. It's also going to be a breakout that measures about 350 pips. So that could take you up towards the 94 level if we get this breakout. So I had this line drawn in because we tagged it, you know, a few weeks ago, and it failed from there, but did not take out the stop. So the cynic in me says that more stops are building up here, especially people are getting short now. So they look at this high and they go, oh, this is where I'm wrong for sure. And the people that got short here with stops over the high are saying, wow, you know, I survived it, didn't pick off my stops, I'm, you know, making money. So I'm thinking that there's going to be a buying opportunity down here. Probably means that the pound's going to have a day where it outperforms if the dollar is weaker. This could be it, this level here, but I don't like the 1 hour structure of it. So it doesn't look to me like, and I think they, you know, need to take these lows out. This happened, I believe it was New Year's Eve day, shortened session, and, you know, really from 38% back, tried to break out. So this is something I'm keeping an eye on because I'm not so sure that we're going to get like a great resolution on Brexit. And I know the pound is rallying. And also, if the euro is good, you know, there is a possibility, and maybe we haven't broken out yet, but I think over 115, it was one of Blake's numbers, probably based upon some kind, yeah, here, 115. Kind of looks like euro pound. So 115, 12.5, why can't we trade up here if we break out over 115? So there could be some pretty good upside, and, you know, maybe the pound underperforms the euro for EG to work, or maybe I'm all wet and that was a great short last week. But those are some of my thoughts. Also, with the dollar under pressure, you are getting a pop in metals after the big decline that we had Friday. You know, I think it was something like $21 in gold. And this is going to be a real test for gold right here. Especially, you would think, you know, with the dollar breaking down, maybe gold has, I see two scenarios. We either, you know, turn here It's about 61.8. Or if we get another new high towards 1300, I don't think it's going to confirm. Similar situation with silver, which is held up much better than gold on Friday. You know, Steve's been pointing out the turn in the gold-silver ratio for weeks now, and that continues to be a trend. So if that's a trend, if you're going to be playing corrections in precious metals, say they're all major bottoms, and you know we might get corrections, and I do think silver could pull back at least to here, maybe 15, 15.10. If the gold-silver ratio is just beginning to work, your short candidate for downside action in metals is gold, all right? And when you're bullish because of the gold-silver ratio, you're going to want to be buying breaks in silver until that ratio looks like it's, you know, was a false breakdown, but, you know, it was a major one. And I'm sure Steve will show it. I'm hoping he has his voice is fully recovered. I lost a little bit of mine during the Bears game yesterday. I didn't know I was still a Bears fan until I watched them and felt sad at the end of the game. But you know what? This is the game that we have a team that doesn't need to win by a field goal. All right? We don't need a kicker because we have guys that could throw down the field and receivers that could catch it, and you're our receivers. So we're the quarterbacks, and we're calling plays here, and it's up to you guys because you're the captain of your own ship. You know, no one puts a gun to your head for you to do anything, but we're calling the play, and you have to run your own pattern to get open and take advantage of our research. So take advantage of our research more than in face. Subscribe, okay? Take the trial. Risk a buck to get on the team and see if you want to be on the team. And also I want to, you know, it's the beginning of the year. If you're trading without supplementary income, then you really have to get a hold of Trent and Justin. And if you're in the US, to get a rebate for what you're doing every day, especially if you're a day trader or a scalper, I'm telling you that you're running up potential income for yourself just scalping the markets. You know, maybe it wouldn't make a big difference if you're a position trader, but I haven't met I've done 1,000 interviews, and you know, I haven't met many position traders, even those that say they are. Sometimes, you know, 3 days is a position.
Dude, I've been short the New Zealand Canadian for like almost 3 weeks.
Oh my God, Blake, and that's unusual for you, isn't it?
It is. It really
All
is.
right. All right. Well, that's cool. All right. So, you know,
it is
once
rare.
in a while when you have something that just keeps rolling on for you and you have conviction, you do it. Let me ask you this though. I traded around it.
Yeah, I trade in and out of it. I keep a core position. Yeah.
All right, there you go. Okay, yeah. So there's a lesson. Blake doesn't let go of a core position, but he trades around it so he could ring the register on the way to whatever his longer term target is. So you need to trade multiples. And, you know, you could break it up and do, say you're a one lot normal trader, break it up 0.3, 0.3, 0.3, so you can do that. So, okay, Blake, I'm done.
Yeah, well, good. Yeah, I'm just I'm trying to get over the loss last night of the Bears. I mean, that was I actually okay, so I play fantasy football throughout the course of the season, and my season's over already. By the way, I won the Turkey Bowl, just so you know.
Oh, congratulations.
Yeah, the you know, it's the losers bracket. I won it, which is great. Made back some of my money. But oops, I don't know what screen I'm showing now. Sorry.
Nothing yet, bro.
Screen. I need to show this
Bloomberg.
one. I have no idea what I was showing. I accidentally clicked the button. So which screen do you see now?
Well, you got a chart. You have different.
Okay, now I do.
Okay, now you got Euro.
Yeah, I think I was showing everything a moment ago. So
I liked it. Looked like a spaceship.
All screens. This is all screens, so you can
like NASA, man.
Yeah. I don't know if I need to go
Ground
back.
control to major break.
So anyway, that's only 6 of the 8 screens that I have. But anyway, you know, and here in the next, actually here in the next couple months, I'm gonna set up, or I'm gonna do a week ahead video and show my whole trading operation, so everybody can kind of get a sense of what I do and what and how it looks around my office. But anyway, I thought I'd do. You remember MTV?
Yeah.
There was a show that they did way back in the day called Cribs.
Where they would show people's apartments and stuff.
Yeah, like people, yeah, like, you know, artists' apartments and homes and cars. I'm not going to do that. I'm going to do my trading crib, and then this way I'll show a video of like my crib in my office. Yeah. So kind of get
go viral, man.
Oh, viral. I don't know about viral. But
come on, Blake. Anyway. You have to show the pool area and all that, right?
No. Nobody needs to see the grotto. No, just kidding.
Good morning.
Good morning. No, I was going to say that Cody Parker was the kicker last night, and he that was a big. I mean, it was a big miss. Anyway, I had him throughout the course of the season, up until the very last, like 4 weeks or so. And man, I tell you, I feel bad for Chicago folks, man. That's for sure.
My sister is such a fanatic. You can't call her during the game. She had
I'm sure you can't call her for like the next 2 weeks.
Yeah. She had a lucky paper towel that she didn't throw away for 2 months.
Oh my God.
I felt like calling my nephew and saying, hide all the razor blades in the house.
Oh, geez. Oh, my goodness. That's crazy. Anyway, all right. Well, hey, real quick, I know I'm gonna be passing things over to my colleagues here in a few minutes, but what I wanted to cover is the dollar had and I talked a lot about this on the week ahead video, but I mean, these candles that we got, you know, going into the end of the week, last week, big reversals in a lot of these pairs. And yes, you can blame, you can say, well, Blake, that was a lot of these moves and these big wicks were because of, you know, the algorithms on, you know, whatever, I guess it was Wednesday night, you know, and that flush out in the market. But regardless, we ended up with the dollar really near the lows against many currencies. So you know, you could have said, well, you know, you can't count like this much of you can't count. Whoops, sorry.
You get those candles every Friday, every Sunday night in silver. Like pull up the 1 hour in silver. I mean, over and over again.
I'm just saying, you don't get, you're like, oh, well, we don't get these, you know, that long wick. We can't count all that. Well, it doesn't matter because we still, like, if you take the Aussie, we still closed at the highs of the week. So regardless, you know, whether it's a big wick or a small wick, regardless, we closed on the highs, or the dollar closed on the lows. So to see the dollar follow through this morning is not surprising. And if you watch the week ahead video that's posted, you know, for free, you guys, you know, if you didn't watch it on Sunday, I mean, to see the euro up this morning, or the cable up this morning, or the Aussie or the Kiwi higher this morning, it's not a surprise. Now, the question is, where do we go from here? And we do have one number, which, you know, we're missing a lot of data because of the, you know, government shutdown. So there's a lot of data that we're not going to be seeing, like we're not getting factory orders today, but we are going to get ISM. And ISM services number. Now, the manufacturing number on, I guess it was Thursday, that was an absolute travesty. Those were numbers that you don't
53,
see.
I think.
54. And okay. You don't see that magnitude of a drop, except when you're in a recession. And to see this big of a drop in ISM percentage-wise, you know, that's scary. That's scary. Now, the services number I don't feel is going to be as bad, but I may be wrong, you know, and if I'm wrong, the dollar stands to get absolutely destroyed here. Because, you know, if you look at, what we're looking at today, you know, we're looking at ISM coming in. The factory orders won't come in today. The ISM is going to looking to print, you know, around 58 or so. I mean, that could be a really, really ugly, you know, it could be a real ugly number. And if it is, you know, for some reason we print, you know, down here in the like 55, 50, 54. I mean, remember, expansion's above 50, so I don't believe we'll be below 50. I'm just saying if we print something that's, you know, 55, 56, it could be, you know, it could be really tough for the dollar. The dollar could actually really come under pressure because we've already got a tailwind with dollar weakness. You got the euro that is above the 618. I talked about this on the week ahead video. If we get above the 618, which we poked our head above it in Asian trade, and then we followed through in European trade. Okay, and frankly, you know, the euro looks like we're going to go back and tag the 115. Now, everybody here should know that if we get above 115 or we get below 113, that's your breakout point. And we've been consolidating since November. So you take this, you know, much consolidation here. I don't really care what your bias is. I could care less, and the market could care less either. So the one thing that you have to adhere to is that when we break out of a range that we've been sitting in the last 2 months, and keep in mind, October, November, December typically are the most volatile months in the currency market. Like I've told you guys before, that's where I make my money. I make my money November, or October, November, December, usually every year. That's where like the majority of my profits are made. This year, it was really tough. I was positive, but marginally, and so this pent up energy here, this pent up consolidation, if we break, I would not want to be on the wrong side of this. You know what I mean? Because if we get a solid break, a daily close above 115, we're probably going to see 116, 118. You know, on the flip side, if we break 113, we're probably going to see 110, or, you know, 111, 110. Regardless, don't get stuck on the wrong side if we pop out of here. Now, we are, like I said, we are approaching the upper end of that range near 115. I'm only bringing your attention to it because if we were doing the flip side, we were down at 113, like when we were a week ago. I was telling you, hey, you know, we break 113, it could get ugly. I'm giving you the opposite today. If we break above 115, it could get ugly. So just keep that in mind, especially with the ISM data coming up. I think it is important. If you look at, you know, dollar pairs, like, you know, you got the US dollar Canadian. I mean, this is challenging channel support right now. Now, and one thing about the dollar Canadian is we are below the breakout point of 2018. So that's a big deal. I mean, this is June of 2018, but still, you know, we've been at lower levels in 2018, but I'm just saying that this big breakout from June, we're below it. So, and with the Bank of Canada this week, the risk is we break through this channel support. So it could get, you know, relatively squirrely here for the US dollar Canadian, especially if the dollar starts to break down against all these currencies. Remember, we do have next Monday we have Parliament voting on. I think it's and Stelios, maybe you can help me out. It's January 14th, right? It's Monday the 14th.
It's supposed to be the week of Monday the 14th, with the most possible date being the 15th, but there are already rumors that she's going to delay it even further.
Again? Okay.
Yeah.
Sorry, I didn't mean to yawn on you, but Monday mornings, you know, they're killers. But so there are rumors that they're going to delay it again.
That's what I read today. I mean, these are just rumors, so I don't know.
Delay until you can pass the damn thing. You're confident you can pass the thing, I guess. So anyway, but we'll have to watch the cable. You know, I think the pound really on broad U.S. dollar weakness, the pound could see 130 without a vote. I mean, if the euro breaks above 115 and we start seeing like the 116 level, you know, we break above here and we start getting up towards 116, the cable could very easily be trading at 130. And this is ahead of the vote. Then, you know, obviously if it passed, you know, we would be a lot higher. But anyway, that's just some things that I'm looking at. Also, the U.S. dollar Mexican peso, extremely weak. We're below the 200-day moving average. We are testing the 618. If you use ForexAnalytix, you got an update on the U.S. dollar Mexican peso about that. Well, that's macro. Oh no, that was key levels. Sorry. Here's basic technical. So the U.S. dollar Mexican peso is testing lows of the session as Trump is having a tough time getting his wall. The pair is below the 200-day moving average, but intraday we are testing the 618 retracement from the October 1 lows. And we were just testing the 618, and we've already bounced a little bit after that test. So, you know, hopefully you didn't get too bearish when that came out, because that allowed for a little bit of a bounce. But you can see the U.S. dollar Mexican peso is threatening, threatening a breakdown here. And, a lot of people are probably viewing the U.S. dollar Mexican peso with the, lack of a significant wall. I mean, you might have a pair that trades back down towards 118 handle, so, or excuse me, an 18 handle, somewhere down in this neighborhood. So
great call by Stell on the note too, from a week or so ago.
I jumped on the bandwagon myself. If you guys do use ForexAnalytix, we haven't had too many patterns in play recently. You can see we closed out like the S&P. Steve closed out his what
a great crude trade. Nice.
Great crude trade. But Stelios,
that's worth $100 a month. One lot pays for it about 10 times. Just
Absolutely.
one pip.
Absolutely. And, Stelios has been on the Noke, and I jumped on the bandwagon too because of the big head and shoulder pattern here, which, we are below channel support. One of the guys in my office, he's looking at the Euro Noke and the Canadian Noke, and he says, they both look, kind of toppy. The Euro Norwegian krona is actually testing some pretty key support currently, but the US dollar Norwegian krona, I mean, we have scope to move down towards 850 pretty easily, and then obviously 840 is the completion of the head and shoulder pattern. So nice little breakdown here for you, Stelios. So congratulations, you got a nice head start on that one.
I get lucky sometimes.
Another big deal is the S&P. The S&P is challenging this is the previous support zone. We are really struggling here, but I'm wondering going into later today, especially if the ISM is a weak number, if we see weak data come in because of what Powell said last week, and Janet Yellen and Ben Bernanke, they basically said, hey, if things worsen, we have bullets in our gun now. We have ammunition, right?
Right.
And they're willing to use it. So I wonder if we get weak data, is that good for equities again? And that's going to be interesting to watch today. If the ISM number comes in weak, will stocks, ultimately, we might see a little bit of a downdraft here. We might see a little bit of selling come in, just because of technically where we're at. But I wonder if equities end up being positive or having a positive outlook because weak data means, a looser monetary policy from here on out. It's going to be interesting to watch the dynamic between data and equities now. I think is something that we need to pay very, very close attention to.
That's a solid comment, Blake, because many people might not have, realized. But once we had have a nice mind day, by the way, everybody. Once we we started having the doubts about the fate of the economy, we actually switched after a long time to good data being good for stocks and bad data being bad for stocks. So that's a very good comment, because let's see if this dynamic is going to change now that Powell was more dovish. Personally, I don't believe it might do it yet. I think that the market might need to hear more about about the change of how the Fed is viewing monetary policy than just a single statement, because that one statement was a little bit contradictory to what we had in the past. So I think that we might need to hear a little bit more before that happens, but it might be the case.
It might be. Well, good morning, Steve. And with that being said, I'm gonna pass it over to you. It sounds like your voice is much better.
It's 80-90% better. Yeah.
Good. So, well, at least you have Dale and you have Stelios here to help you as you're navigating through the markets. And I'm gonna pass it over to you guys so I can get to trading. So,
thank you, Blake.
Thanks,
guys. Thanks, Blake. Before you start,
good hunting.
Thank you.
If I can just say a couple of things that I'm looking at this week.
Absolutely, Stelio.
So first of all, data-wise, it's a pretty light week. We do have on Wednesday Bank of Canada interest rate decision, expected not to move rates, but now the commentary will be interesting. We have the FOMC minutes. Yes, we have the FOMC minutes on Wednesday as well. And we have CPI, US CPI on Friday. But overall, it's actually the quietest data week we've had in a while. The interesting thing that's happening this week is today and tomorrow there are the trade talks between the US and China. And I was reading today that although it was supposed to be trade talks between lesser level, let's say, officials, the vice premier of China is attending. So they seem to be a little bit more, putting a bit more weight to them. Who knows what's going to happen, but definitely worth looking at that, because if there are any headlines, any positive headlines, what happens with stocks, they're going to jump. And
absolutely.
And like Blake said, we have theoretically the UK passing the May's deal through Parliament next week. It might not happen, might do, but we're getting to a point where we've forgotten about the UK for a couple of weeks, but they're now coming back to the spotlight. So cable and sterling pairs are going to be pretty jumpy.
Yeah, that's very true. That's very true. Yeah. Once again, which is like back to usual of what we've had since the unexpected Brexit vote.
Yes.
Let's hope that we're going to get some kind of a normality for the cable once again at some point, because the news-driven trade is quite annoying often. I mean, you get those weird spikes that sometimes they don't last at all, but they're enough to get you quite scared about committing to a position, because who knows what's going to happen early in the morning or overnight or whatever.
Yeah, actually, one more thing. Actually, absolutely. We have on Thursday, if I remember, for those who do trade the NOK, we have CPI coming in, which is the most important number out of Norway. And for people who haven't been following this, CPI has jumped quite dramatically. It went up to 3.4% year on year, with the target being 2%. And all the commentary last month was that, this is a temporary thing, and it's expected maybe to ease back lower. Now, remember, oil
is a temporary thing; it should go higher.
yeah. Remember, oil has been rocketing up last week or so. So I'm not sure it's going to go much lower, but just something to keep in mind if you trade in Norway.
Yeah, that's very true. Although they've shown amazing numbness to any kind of data, any kind of theoretically hawkish data that come out there, right? I mean, they've just almost avoid doing anything about them, which is completely counter to what they're supposed to be there to do. But who knows? One thing is for sure that since you started from the NOK, I have no problem starting from there. One thing is for sure, my end of year resolution is that both USD NOK and USD CAD turned from very key levels. We keep updating people on ForexAnalytix for that. The NOK, for example, This was a confluence of three resistances. It was the 161.8% extension of the last corrective move lower. It was this ascending channel's resistance, and we also had this steeper red ascending channel. So I was looking for a reversal there. I did not trade it because I had the preference of trading the USD CAD, but I had a very stupid idea of a counter to what I usually do, of actually I shorted it roughly at 136 if I remember, and I had a stupid idea of after seeing this little reversal day, I had a stupid idea of keeping a very tight stop loss because it was the end of the year. I had a good year. I didn't want to get myself in trouble, and low liquidity and all those worries affected my judgment. And what happened is that I in essence almost top picked it, but the market first kicked me out for 20-25 pips, and then it reversed hard because USD CAD was also testing confluence of resistances up here, and it did indeed show a huge reversal here. It started with an evening star formation, and then we had two very good days of follow through. And as Blake said earlier, it's now testing this previous ascending channel's support. A little bit lower, we have the confluence of this horizontal support resistance area. If I go back, you can see how many times it has acted as support resistance. The 50 DMA is also here, and the 38.2 of the last move higher. So very key area here, anywhere between 133 and where we currently are. If we do break below that as well, I think that there's going to be a lot more downside, and a lot of people definitely got caught buying it at the worst possible point. Now, obviously, these kind of moves are also highly correlated with, where is it? Yeah, here it is, with crude. So crude, very well bid. I closed the pattern play because it performed really well, but I'm still long 1/3 of my initial position, which is I had a cost average of 44. So I'm still holding 1/3 of my position, in case I get really lucky and get a jump much higher, because I wouldn't rule out even a squeeze towards 54. So I want to, since I made a very good profit on those 2/3, I want to keep the other third in case I go for a home run with it. So, I don't have any risk anymore with it. So I want to see because there is the potential, as I said, that we might squeeze a lot higher from here because the market was very, very short positioned when we were pushing towards 42. 42 was a great buy, a great area. That was when I bought my second piece of US oil because, as you see, if you go back, 42 was a key level. We also had a very clear RSI divergence. So if we do get squeezed higher in crude, that is going to help USD CAD and USD NOK push lower for at least a period of time. So it's not unlikely at all. Now I'm not going to cover the euro because Blake said everything that had to be said about that. Cable is definitely also, especially after this spike lower, which in essence fulfilled my target for one more push lower. I would be quite skeptical here, although the move higher doesn't look impulsive in any way yet, but I would definitely be a lot more careful with being short the cable. We know that the market is overly short, and as you said, Stelio, anything can come up in whatever it is, in 8-10 days. So probably I would stay out of that, but I think there are other opportunities in the market at the moment. So for example, if I would begin, let's go down to a 4-hour chart, because I think that there are a lot of things that are interesting to see in a 4-hour chart where we currently are. So let's begin by having a look at the S&P. Okay, the S&P can, if you remember, I had a target of that the S&P would reverse anywhere between 2550 and 2630. We were discussing this with Greg at the end of last week, that this was my sell zone in here, anywhere between this horizontal resistance area and 2630. Why 2630? Because 2630 has been support in the recent past. It's also the 61.8 of the last leg lower, right? So in essence, pre-trading We did test the 2550 area. We seem to be weakening from here. That doesn't mean that that's a high, but there is a possibility that that was a pennant. So there is the possibility that we might even turn lower from here. Coach, are you dancing?
Yes, buddy. Huh?
Are you dancing?
No. What do you hear? My breathing? Okay. No, I'm clicking a pen.
Oh,
huh?
yeah, that was it.
Oh. Yeah, I'm doing a calypso in the office. Can you guys imagine that? All right, go ahead. I'm sorry,
I would
bro.
want to see a video, to be honest.
All right. Yeah, okay, buddy. I'll be on crib.
So let's see if the only way I'm going to turn like immediately bearish is if we actually see a break below this ascending trend line support. In this case, that will start looking quite a lot like a pennant, and in which case I would be looking for more weakness straightforward from there. Otherwise, as I said, another push higher towards 2600, 2630 is not unreasonable at all. And I would really love to start building a position there, looking for a move lower. I think that the risk-reward ratio is going to be very appealing. Now, nobody can guarantee to anybody that something's going to work, but this is what I'm looking for. Now, having to do with the DAX has jumped from the lows, specifically from the 161.8% extension. If you look at the 4-hour chart of this little rebound here, but as I was saying to Grega on Friday, unless I see a break above 11,000, I repeat, this is the 4-hour chart, right? I would remain quite cautious because there is no technical event. I remind you that anyhow the head and shoulders target. Now we can go back to the weekly chart so you can see how important this head and shoulders was on the weekly and how clearly defined it was. Is a little bit lower. It's roughly at 10,000. So we might see another push lower. I would ideally want to see this target being filled. Of course, somebody can say, that was close enough. And if you did take, the head and shoulders pattern trade, that means that you found yourself very deep in the money, which, would require that you should have done something about it. I mean, take partial profits at least, trail your stop, etc., etc. So in any case, if you follow this pattern, you would definitely end up making money, even if we don't end up hitting the exact technical target. Now, obviously, no matter which index you have a look at, you want to see the S&P. This is what I was looking for on the daily. You want to see the Nasdaq. The Nasdaq was one of the weakest. It's jumping, but is it over? I don't think so. I think there might be more weakness coming from here. Now, is it going to be the Russell? The Russell, actually, where is it? There it is. So the Russell, actually, very interestingly, almost made it like to the 61.8. And if you see, it perfectly tagged this previous high that we had in September 2016 before starting this rebound higher. It remains one of the weakest. I think that 142.50 is going to prove to be a very tough resistance to break to the upside. So, I wouldn't rule out a rejection from there and another leg lower. Let's properly. There it is, and now we can delete all that because it has already transpired. Okay, so now, why did I go initially down to the 4-hour chart? Because those at ForexAnalytix, we were writing in the chat room about those pairs. The Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi gave us some very nice signals for a reversal. For example, Euro Kiwi, ascending wedge, beautiful breakdown. We came back, we retested it, and we're resuming lower. Euro Aussie, even more clean. Unfortunately, I got short. I almost top picked it here until we got that spike overnight, in which which actually kicked me out at break even because I had already trailed my stop loss at break even. So unfortunately, I didn't benefit from that initially, although I did get myself a nice entry. Actually, one of our chat members, she inspired me to jump on it because I was, looking at it, and initially, I had my end of year like doubts, like should I jump on it, low liquidity, etc. But I was like, what the hell, I'm gonna take it. But this spike that night just took me out at break even. So unfortunately, I don't have this position anymore. But I do think that there is room for more weakness. This looks on the 4-hour chart like a bear flag. I would assume that there should be more weakness at least towards the 158, 60 area. Now, if we go to the equivalent pound charts, now, first of all, pound Kiwi, we had a textbook inverted head and shoulders formation. We showed that last week, if I remember, in the chat room as well, which, first of all, hit its target perfectly and then reversed. Now, so far, the reversal does not have like impulsive characteristics, I have to admit. I mean, we're seeing some type of a consolidation between a support and resistance area, but I wouldn't rule out another leg to the downside. But the fact that we fulfilled the inverted head and shoulders target before starting to back down should be somewhat worrying for the bulls. And the pound Aussie looks much better, currently to the downside, because the whole rebound, as you see, can be seen technically as a wedge, like a big pennant or whatever. We did break down from it, and so far on the 4-hour chart, we've had plenty of indecision candles, which tell me that this is like a short-term consolidation. So for this one as well, I would expect more weakness, at least towards the 61.8% fib, if not lower. If not lower from there. So I think pound Aussie, pound Aussie, and Euro Aussie, for the time being, they look quite nicely for a continuation. So probably even if you lost the initial breakdown, probably there is more money to be made being short here. At least the technical picture, implies so as we speak. Let me see if we have any questions. ISM postponed due to government shutdown, says JP. USD-SEC. There's a question about USD-SEC. Let's have a look at it.
USD-SEC, they're not even putting out ICM?
Yeah, as it seems.
What are they going to do? Barrage us a year from now with the 1 million reports? When
with data,
Trump said he could keep it shut down for months or years.
He's not going to do that.
I know, but I mean, what are they going to do with all these old numbers, Steve? What do release them all, or they won't, or
no, they will release them all with a delay. That's what happened the previous time as well, if I remember right. That we had a government shutdown. So that is going to be like, as you said, a barrage of data. So as you understand, that can be market moving, because if you get like a lot of data at the same time, and let's assume that they point more or less in the same direction, let's say more weak data, that can definitely cause quite a decent move, because
I agree. It will definitely create volatility, because you go from a vacuum to getting hit with all kinds of information. Yeah, the algos will go crazy.
If you remember, the previous time we had NFPs, I said that I expected a weaker number, and we did get so. But the last time we had NFPs, this Friday, we talked about it, and I said that, listen, NFPs, we had a good ADP, so NFPs might be good this, might be good this time around. But I wouldn't change my general overview, because for those that don't know, because I saw a lot of people write on Twitter afterwards, like, yeah, right, we're heading to a recession with 300 plus 1,000 NFPs, etc. But if you go back and have a look at the historical data, you're going to find out that very, very frequently in the past, we had quite explosive NFP data numbers.
Like in 07? Like 07?
Yeah, just before the economy turned lower. The same thing happened, I think, in 99 as well. That is due to employment data very frequently are also a lagging indicator, right? Because in essence, very frequently employment is something, as you know, Coach, that it's something that, a company makes plans, for example, in advance, and sentiment indices like how they feel about the economy, which are always lagging indicators. For example, we always see sentiment indices being at the highest just before a recession. So because businessmen are also people, and they're also driven very often by sentiment. So when you're looking ahead at the economy and you're very positive about it, you start planning some hiring, which until you do so, until it starts coming through the pipeline, etc., there is some time for it to be completed. You know what I mean? So personally, I don't change my overview that I think there is a huge chance that we're going to be in a recession within this year, 2019, just because we had a very strong NFP print. So as I said on
things
Friday,
always look the best at the top, worse at the bottom, Steve.
Depends on what you're looking, because there are some indicators that are very known as being leading indicators. And for example, I've been warning about them because two very reliable leading indicators are the auto industry and home builders, right? And both of them have been like sending, very ominous signals since like half a year ago, right? So, but there are other kind of indicators that are lagging indicators. So, as I said, nothing has changed in my opinion. Anyhow, let's go back to the charts. We have a friend asking about USD-SEC. I was short USD-SEC for a very long period of time, and I ended up just, exiting the market roughly at break even because I got bored of waiting to see what's going to happen with it. Initially, I thought, we had this nice wedge. We broke down, we came back, we retested it. So then I thought, okay, this is, a nice breakdown, pullback, continuation, but it ended up being like, a big triangle. So we seem to be threatening this. We actually did break down, for half a day. We found the 200 daily moving average as support, and we did rebound back in the triangle. Now we seem to be threatening this once again. To be honest, I think that we need to see a daily close below the 200 DMA to look for some kind of a continuation. But if you're looking to have exposure in something like that, I think that the USD CAD and the USD NOK are much more preferable because, as you see, once they reversed, they started moving with a lot more momentum than USD-SEC has done. So I do think that USD-SEC probably should be avoided as a trading pair at the moment, and at least until it shows some more willingness to, to produce a bigger movement and show some kind of a conviction for whatever it wants to do. Let's see if we have any other questions. Kostas says, my ex-colleague, what if the numbers are abysmal and all this is pretended to hide the softness of the economy? I don't know, Costa. I genuinely think that Trump, I'll tell you what I think about the wall. I think that the wall in general is a trick. In what sense? As long as the stock market was doing fine and Trump could claim victory in one of the most important elements, which is the economy, since he had, in essence, made the stock market being a full reflection of the economy by his statements, right? And to be honest, in the monetary-induced economic growth cycles that we've had the last 3 times, I can't blame him for that. I'm with Trump in this, meaning since especially the last recovery that we had post the what is now called the Great Recession that we had in 2008, even Bernanke openly admitted that the Fed was targeting asset prices, asset valuations, to, in essence, reverse the fate of the economy with trickle-down economics and, reverse
Wealth effect. Wealth effect.
exactly, it reversed the wealth effect damage that had been done by the blowout of the housing bubble. So we know that at least the last economic upturn was technically and by default and by definition and by intent meant from the Fed to be one of an asset bubble, let's say, right? The previous ones, I think, happened by mistake because they didn't understand how the monetary policy being so loose for so long could create bubbles. But the last one, they did it intentionally, right? Because it was the fastest way to help the economy recover. So once the stock market turned lower at the end of the year, I think that Trump wanted to deflect attention from what was up until then his most precious, jewel, let's say, which was the stock market. So he immediately wanted to switch to another topic that, his voting base was, considering important. That's why I think that he immediately put so much weight on that, and he had no problem shutting down the government for it. My personal assumption is that, first of all, they're going to find some kind of a resolution. And in my opinion, the better the stock market does in the following days as they are actually negotiating for some kind of a resolution, the higher the likelihood that he will compromise for something that is going to be, meaningless. So, for example, like we had with NAFTA. What did they do with NAFTA? They rebranded NAFTA. They gave it a different name. If you have a look, because I read like a multi-page report about the changes between NAFTA and the YSCMA, or I don't even remember how they've rebranded it now. The name, the changes are minuscule. I mean, let's say the change between the two of them is not even of the magnitude of 5%, right? And Trump took a deal, changed it by less than 5%. And, he was claiming that was the worst deal ever made in history. And after a 5% deal, and after not even a 5% change, it was afterwards branded as the best deal made in history, right? So,
Steve, I heard some liberal guys and some Democrats would support the wall if it included huge speakers all along the 2,000-mile border that blasted out Pink Floyd, The Wall. I'll call my congressman today if I can hear Pink Floyd when I go to the border.
I would want to see that, honestly.
What a great song. Anyway, they should be playing that when they talk about this. Anyway, it's funny.
By the way, am I right? Did he actually change his mind and he wants to do it now from concrete to steel?
Steel, yeah, because all the tariffs began with aluminum and steel.
Yeah, absolutely.
And those states where most of the mills are critical states for his reelection that he won. So yeah, he's talking about doing it in steel with slats so you could see through and wave to people. But he wants to be able to see through it.
Okay. Personally, I don't believe that.
It'll be steel.
I don't believe that the wall will make much of a difference because we've seen that people. Immovable barriers.
Yeah, I bet Stelios would want it built in silver.
Oh yeah,
some more demand.
Bring up the demand. Yeah, bring up the demand.
Prop up the price, right? Speaking of silver, you spoke about it before. Let's have a look at the not of the two actually. Let's have a look at all the metals because first of all, we need to see if the signal that we got on Friday from gold is a real one, because of course a potential reversal candle is not enough to call a top, right? So what did we get on Friday from gold? We got an outside black candle, and we got that potentially in what can be seen as an ascending wedge. So I want to see what happens from here. The day we're seeing so far today, though, does not inspire much that was a real reversal on Friday. So I have to say that in advance. Now, so gold, does seem to be losing momentum. There's no question about it. It did test the 1300 area in the futures market, not in the spot market. So now we're looking at the spot. It didn't test it, which is quite a significant area. Remains to be seen what it's going to do from here. To be honest, initially I thought that it would fail anywhere between 1260 and this broken trend line support acting as the resistance, which was roughly at 1275. So it has already surprised me by passing through there. Now, what has not really surprised me much is silver, because once silver did make it above this very well-defined rectangles resistance, it was more than certain that only the stops that had probably gotten accumulated up here would be enough to prop up silver, at least.
Is it at targets from that rectangle, Steve, or is there higher
yes,
to go?
Yes, it did hit the target from the rectangle.
Okay. All right.
On Friday it did,
Okay.
but it might make it even higher, because we have this nice 61.8, which also coincides with the $16 level, which is a nice round level, a nice psychological level. But I have to say that this move higher looks in the short term quite impulsive. So I wouldn't be surprised if there is more. So if we go to the short term, I wouldn't be surprised if
buy
we get
dip.
at least something like this, right?
Yeah.
Before getting a deeper correction. And that's when I will start getting very interested, because once we get something like this, I would really want to see what will the nature of this move will be for me to decide if I actually want to be buying dips, or that was like a spike higher and then we have more weakness. You know what I mean? So it's too late participating in the upside if you didn't buy the breakout, but definitely I will be paying very much attention to this leg lower whenever it comes. I want to see if it's going to have impulsive or corrective characteristics, because if it has corrective characteristics, I won't hesitate in buying a pullback, for example, towards 1520. 1520, quite an interesting level. As you see, it was previous support. And when we had that spike lower, we retested that exact level and then closed at the high of the day. So 1520, a nice area of support if we get back there, to be, that will be interesting in buying the metal. Now, let's have a look at what platinum is doing, because platinum is by far the weakest, and I have to say that platinum kind of surprised me, because I did break down below this channel, which was by definition a bear flag, since we are in a very strong downtrend, and then we started having some continuation. Then we started consolidating, which in this case it has a very high likelihood that this consolidation is some kind of a triangle that should also produce continuation to the downside, but then we broke the upside. So I want to see what platinum is going to do from here. Now, having to do with palladium, I have to say that in palladium, I'm still looking for a high, I would say fairly soon. It's already showing several signs that momentum is waning. We've already had a very big move to the upside. So I think some kind of a deeper pullback should be underway sooner rather than later. Now, back to copper. I'm still short copper. I've already taken profit on half of my short position. I'm holding the other half because we had that breakdown from the symmetrical triangle. Now, it remains to be seen. I think that this 26.55 is resistance. Let's see if we're going to pass above it. I would eventually prefer to see a move lower towards 244 to fulfill, this the target of of this triangle. At the same time, this would complete a bigger head and shoulders formation in copper, but we'll talk about that when we get there, if we get there. So copper, as long as it stays below this broken trend line support, I think that the path of least resistance remains lower. I don't like this kind of a candle that we saw on Friday, but I've already booked half profits on half of my position, so I'm not risking anything. So whatever comes, we'll handle it. Now, Coach, you mentioned very correctly the gold-silver ratio. And as you see, the gold-silver ratio, not only did it break down from this ascending wedge within a larger ascending wedge, but it also produced some very decent continuation. I mean, this is the kind of momentum you want to see when you get a technical formation breaking. But now we're approaching a very critical area of support, roughly at 81.50, which means you need 81.5 ounces of silver to buy 1 ounce of gold. As you see, the 200 daily moving averages here, previous support here, previous resistance, previous resistance, previous resistance, previous resistance. So 81.50, quite an important level for the gold-silver ratio.
Yeah, maybe we got a right shoulder. Maybe that was a head in the wedge, and before it was a left shoulder, and maybe we get some type of right shoulder here.
Yeah, we might now that this already has happened, let's redraw here. So we might get at least some kind of a temporary bounce from here.
Right.
But then if you see
to put things in perspective, Steve, normal like reversion to the mean, and then we do have an interview, Mr. TA's here, is 40. In my experience as a commodity broker for decades.
And 40. Actually, let's go to a monthly chart since you mentioned it. Let's zoom out to a monthly chart, and you can see that even a move back to 60 would be a mean reversion to the latest average, right? So I mean, a move from 81.50 to 60 is still like a huge move, right?
Right. Yeah. Yeah.
So yeah, I agree with you. There is the potential for a lot more downside, especially if we end up breaking this trend line support, because this is like a very long-term trend line support at a very large ascending wedge. So I think that if we do break below this, which until we get there, it's going to be roughly at 80, that's going to be a huge technical break, which most likely will have big implications, right? Because I think that everybody that trades metals is going to notice. I mean, even those that haven't noticed that something might have already started happening, by then they will notice. You know what I mean?
Right, and then we'll take profits. Anyway, buddy, again, as always, great rundown of the board, and glad you have your voice back, because I count on your analysis every day. So thank you again, Steve and Stel. Huh?
Thank you, Coach. Have a nice interview, and we'll be here tomorrow again as well.
We sure will for Turnaround Tuesday. Okay, Mr. TA, anonymous man, welcome to Face. Looking forward to hearing your voice. Thank you for taking the time to chat with me and address our community.
Can you hear me okay?
I can hear you very well.
Wonderful. Nice to meet you, sir.
It's really nice to meet you too. You have quite a following. A lot of people looking forward to our chat. And the way I like to start, are you going to show your setup or charts, or do you want me to?
Yeah, I mean, we could.
Okay. All right. So look, you're a currency trader too. Great. So I like to start with this, Mr. TA. I like to go back to the evolution of your career and what you were doing prior, and what was the catalyst that brought you into trading, and who influenced you, and did you have mentors? So why don't we get in the time machine together and tell me about how you broke into this and who you blame for you becoming a trader.
I blame. I actually started, I got an interest. I'm 30 years old. I've only just turned 30.
Don't rub it in.
Actually, it was quite a milestone for me. It was quite a pressing one, wasn't it? Yeah, I started after the financial crash in 2008. I'd say about 10 years ago. Yeah, turn of the year 2009, I started getting interested in trading, but I didn't really have the real motivation for it. I bought a couple of books, and it was all just gibberish to me. I didn't really know what I was doing, and I looked first into stocks. And then I think I tried it for a couple of months, and I really couldn't. It just didn't stick with me, to be honest. And then end of 2013, I had a few conversations with a friend, and he was getting into trading. I said I'd had a bit of interest in it before, and we started looking at stocks together. Again, it was sort of like, if you think of trading, I think that's the first thing people think of if they've just
Right.
come from a completely a background, you know, where they don't have any idea about trading. You know, you hear of the stock market and that's it, right?
Unless they're from Chicago or New York,
Yeah, for sure.
or London. I mean,
Yeah.
you knew about the LME and the exchanges over there where they traded commodities, right?
I mean,
In London.
if you're in one of the big cities, you know about it.
Yeah.
I think I didn't know you could trade Forex the way that I do now, basically. So back end of 2013, we were looking into stocks, and it was quite a lot of management and keeping up with the news and all that kind of stuff, and it didn't really suit my lifestyle at the time. I quit work. I was doing graphic design end of 2013, and I took a year off to have a go at copywriting and web design and off my own back, basically. But it also gave me the freedom to look into trading for the first time on a basis where, you know, I didn't have to clock into work 9 to 5, Monday to Friday.
Right.
So I didn't have a great experience with stocks, to be honest. I had noticed, me and my friend, that there was a company called Shire. It was a pharmaceutical company, and I don't know, anyone who's listening who knows stocks better than I, and obviously yourself, probably know I'm probably going to talk a lot of crap here, but the earnings reports come out on a quarterly basis, and they usually come, I think it's when the market's closed, and then when the market opens, they react to the earning reports.
Right.
So we'd noticed this company, Shire, they had, for the past, I don't know, like 2 years, they released their earning reports at midday rather than when the market was closed. So it gave you a little bit of time to analyze the market before the
Close.
Yeah, and before the news was going to come out. So we basically, it was March 2014, and they'd had a really good year the year before. And we were looking at basically, you know, it jumped up on every every earnings report that was released. The price had gone up by like 150 points every single time. So we're thinking, year-end reports, okay, it's going to obviously be a really good report. Let's jump in. We'll just chuck a load of money into it, set our stop losses, and, you know, we'll look at probably making about 150-point gain. And the yearly report came out, and I think the CEO had basically come out and said, oh, you know, it's a really good year, but I'm stepping down. So initially the price tanked, hit our stop losses, and then they went on to all the you know, we've had a fantastic year, here are all the results, and here what we're forecasting for the next year. And then the price went up by 200 points. But, you know, it kind of whipsawed first off.
Salt in the wound.
Yeah,
Shake
that's
it out and then do what you thought it was going to do.
Yeah, and it was a big chunk of money that I'd put onto it at the time, for me. So I was a bit, I was burned, and at that point I was like, you know what, I'm not doing stocks again. I can't do this. So I think towards the end of 2014, that's when I realized that Forex was something that I could look at. I didn't have to manage it as much as stocks. I didn't have to worry about, if I'm looking at X company, you know, Y company in a completely different country in the world, whatever they do could affect the company I'm looking at on, you know, the complete opposite side of the world where they're based. So it was a lot more technical based Forex, I've found, and that is my approach to it. I'm purely technical. I look at big news events that come out on a weekly, you know, sort of things like non-farmers payroll and any major event that you can find on the economic calendar every week.
So you're pretty much self-taught, TA, right?
Yeah, so I found a website called readthemarket.com. I'm not sure if you're familiar with it, and I basically learned supply and demand trading through that.
All right. So I see those are your horizontal lines. You know, some people call them pivots, daily, weekly, monthly, and you call them, the Online Trading Academy charges $20,000 to teach people supply demand zones, right?
You know,
Is that who it was?
that's it. You know the guy, yeah.
Okay, yeah. So hope you didn't pay 20.
I didn't pay 20, no.
I believe in it. Yeah, they're important areas, and also looks like you are not a believer in any kind of indicators. I've interviewed quite a few people that trade naked, and pretty much you are. So
Yep.
I hope you do it with the shades drawn, Mr. TA.
I think I always say that with indicators, I think they obviously work. There's my kind of opinion on them is that if you go onto any broker's platform, you'll have inbuilt tools. And I just don't think that it's as easy as let me stick on a moving average and make my trades there, and let me stick on the RSI. I think the problem with most people when they learn trading is they'll rely on these indicators, but they won't really research the data behind what makes them effective. So
Yes.
A lot of people will, they'll look at a monthly or weekly chart and stick on a moving average on it, and they'll say, well, look at this point here. If I just stick to every time price hits the moving average, I'll long it or I'll short it, and they apply that on the lower time frames and so on and so forth. But I'm completely price action trading, and I put a lot of hours into it. And I just think if you're going to use an indicator-based strategy, you need to do the same thing. You can't just try 5 to 10 trades on one indicator. It doesn't work, right, and decide to jump onto the next one. But I've got friends in banks that they rely on the algorithms and the indicators, and it works for them.
Right.
But for me, it's just something that I've never been interested in. I've tried a moving average strategy to take profits, but I've realized that I can just use my initial and original analysis to determine when best to exit and enter trade. So for me, it's not something I'm interested in, but I can certainly see there is some sort of reward from it if you put in the right time and effort to learn it correctly.
Okay, so I see you trade currencies, but I also know you have a pretty big focus on crypto. Is that correct?
That's correct. Yeah, sort of. Forex is my bread and butter, and I've ventured into crypto sort of at the worst time possible. What was the end of the bull cycle? 2017.
Bitcoin. Yeah,
that's it. Yeah. Thankfully, I didn't buy it at that high.
Okay. So you traded anyway. I mean, were you more of a trader or like one of these guys, what they call it, hodl? They just buy it, hold on for dear life, and they're,
There's a bit of column A, bit of column B, to be honest. I have some coins that I've bought quite low now, and I'm with the idea of holding them for the next cycle, which I do believe will come. But I only realized that as a UK citizen, I could start actively trading Bitcoin. I think it was in March or April.
Okay.
So I tried it on Bitfinex, one of the major exchanges, sort of this time last year, when I realized that the market was going down, but I didn't have any way to short it. They didn't have GBP to Bitcoin trading at the time. So from sort of like April onwards, I've been trading crypto. And I think now that we're sort of at the bottom of the chart, I think since sort of September time, my focus has shifted back towards Forex because that's where the volatility is, and Bitcoin is just ranging at the bottom.
Yeah, we've had a decent little recovery here. It's possible. I mean, from what I see, that we're completing a wave one in Bitcoin up here around 4,000, and I'd be looking at pullbacks around 3,300 possibly. But what I want to ask you, last week was a very difficult week, Mr. TA, for many traders because of the bear raid that we had in the yen and the Aussie, and it cleaned out all kinds of stops. How do you were you in the markets when that happened, or after it happened? Were you reacting to it? It's a very difficult thing to handle, low liquidity crashes or explosions which, you know, I've seen on both sides. So wondering what you thought of last week, and if it's kind of a hint that the market structure isn't that sound that they could take, you know, 500 pips out of the yen in 5 seconds.
To be honest, I had just before Christmas, I had entered short on AUD JPY, also
Okay.
CAD JPY, and also GBP JPY.
Nice.
My initial target for it, and I've put it on my Twitter actually, but let's see if I can get it up here. It was
Oh, a measured move of that big rectangle, you know, a breakdown from 79 would give you 74. Was that what you were looking for?
I was looking, 82 down to 79. Was actually my initial trade. I don't know if I can just zoom in on that and without it elongating. But yeah, sort of. So I'd entered up here and I'd caught. Sorry, it was actually up here at this gap. There was a nice zone here that I took. So that was my entry point on AUD JPY, was this lovely little level here.
Yeah.
So
that's a great risk off trade.
Yeah. I mean, it was caught it at basically the perfect time. And then obviously they put it back on, haven't they? And we've just absolutely sunk. So
yeah. So you got out and then it crashed.
Yeah. So I put
All
my
right.
stop
So
loss.
you know how many times that's happened to me? I can't count it.
Oh, sorry. No, I put my stop loss above this resistance line here with my entry in this yellow circle.
Right.
And my target was down here. At this
I see. Right.
So I caught it down there, but I mean, I couldn't beat this.
Yeah.
I gave
that's
up
what I mean. All right. So that aggravates me. Okay. You know, I'm kind of known for making the tough money, you know, at the turns, and, you know, having what I call at times first daylight syndrome. And, you know, I've learned, and even though I don't always practice it, you need to hold a core position for days like that you would always have a piece on. And someone once taught me or told me, and you could ask yourself this question when you're looking to cover a profitable position, ask yourself if you would reverse there. And if you wouldn't reverse there, you can walk away. And because you go, you know, anyway, it's kind of I think trading 90% of it, TA, is in our heads. So a lot of it's psychology. I mean, you could be the greatest technician in the world, but if you don't have the right psychology, like I hope this one works, you better shut down your platform. So I'm just wondering psychologically, what do you say to yourself when, even though it was a great trade, do you look at it and go, oh, you know, I could have made, you know, twice, 3 times as much money? Or do you say next?
To be honest, I used to really look at it and go, I could have held that for a lot longer. There's been times, you know, where you've placed a stop loss and it's faked it by a couple of pips, triggered your stop, and then completely reversed in the direction you thought it was going to go. And I've just kind of learned over the years, really, that you can't fixate yourself on what could have been or
would have, could have, should have.
Yeah, you know, I mean, this particular trade I'd made that I was just showing you here, I think that one was 4 or 5R, and I go quite risky with my positions. I go in with 5% risk each time.
Okay.
So you know, that's like a 20% account growth.
You're a shooter.
Yeah, I am. Yeah, and I put my results up actually on Twitter end of December for a 5-week run, and you know, I've done pretty well. But in terms of your question, it's kind of so you can see this. These are one of the entries I'm looking at next. These little green and red boxes, and I'm pushing it down to a big demand zone, which I've found at the bottom, and it could, you know, it could do the exact same thing. Price could drop completely down below it, but in my eyes, this is a logical trade for me. You've got a 13R trade or a 6.5R trade if I go for a little bit more conservative with my stop loss, which I tend to do normally.
What does the R stand for? Resistance?
Reward.
Oh, risk reward. Okay, I got it.
Yeah, sorry.
Okay. All right.
So I'm happy to take what I've set logically. So this going back
So
to
you're looking to sell a rally back towards the breakdown, 79 or so.
yeah, that's right.
You
So
would say you're looking, you put limit orders in or monitor it, because it could happen when you're sleeping. I assume you don't stay up 24/7. Do you use, like, you have enough confidence in your levels that you'll just maybe layer in at different prices, limit orders to be filled?
I don't layer in at all. To be
Okay.
honest, I just go with a limit order and
Okay.
trust my levels. And I kind of have a scatter approach where I will have, I look at about 15, 16 different charts, and I do higher time frame trading. I don't
Right.
look at anything, I don't look at entering anything below H4.
Okay.
H8 is typically my favorite, and anything
Interesting.
above that, obviously.
Okay.
So sometimes they'll hit, sometimes it won't. So I've, like, for the example was that with the against JPY in December, I had 3 charts hit, and obviously made quite a lot of profit for me. But there was a couple where I think there was USD CAD. I shorted that and got stopped out. And I think I had like 5, 6 losses in a row. But one of these trades, which I'm showing on the screen now, can eliminate all of those losses and then go and make me the profit as well. So it's kind of I've done it enough now over the years to kind of trust the levels that I set, and
Okay.
it's kind of my general view on things is, if I get stopped out, I get stopped out. If I win, I win. I'm quite neutral whether I win or lose. So if something makes sense to me, I will take the trade. And if I find myself trying to justify a setup for too long, I will just walk away from that and find something else, because I think if you're looking for the trade too much, you're going to lose that trade.
If you say to yourself, I have to find something to do, obviously at times there's nothing to do. I'm interested in this answer from you, because I ask everyone, TA.
Sure.
How many years would you say it took you to make a breakthrough to where you became more consistent and, had confidence that you, even though even the best have drawdowns, could make a living at this? How many years would you say it took you?
So one of the things that I get a lot of disagreement about is a demo account. And I actually traded a demo account for 18 months while I worked out a strategy. And a lot of people don't agree with that, because they think you have to have a little bit of skin in the game. You actually have to put a little bit of risk on the table. But for me, I took it very, very seriously. I wanted trading to be my career, and I took the demo account as if it was my real account. I didn't set anything stupid like a 200 grand fake deposit and I'd be trading out. I started off with what I would actually put into a live account, and then, to be honest, for about 12 months, my ego was heavily invested in that account, and I realized, I think it's a personality thing. Some people could take that seriously, some people couldn't. But I never wanted to be wrong, and it was only after about 12 months or so that I realized that it's okay to be wrong as a trader, as long as you make trades that negate your losses. So I think really when I started noticing a difference in my results was probably about 3 years after I first started learning. And I used to...
That's right in the average range.
Yeah.
Most people say 4. So, I think a lot of people have unrealistic expectations that, they're going to be good at this right away. And, people that sell the secret to trading, there is no secret. It's hard work, hard work, perseverance, and living through adversity. That's the secret. And so that's a great answer, 3 years. Here's another question, because in fact one of my mentees suggested I ask my guests this, because I talk about market messages and market tells that I get from correlations or stops not being hit, or RSI giving me confirmed highs or divergences. What would you say is the most important thing you've learned for trading that gives you biases to trade and kind of let you know a little bit ahead of time what you should be looking for a setup?
So my way that I do analysis is, as I said, on price action. So I get tells from the market where a key level is. So one level may have broken another key level, and should the most recent key level be broken, that's kind of an indication for me that price wants to go in a certain direction. So
your supply demand zones are really like the crux, and the most important part of your trading is whether they get rejected or taken out. Is that correct?
Basically, yeah. So
Okay.
for example, here, if I've got this as a demand zone, and this was my original target for my short up here, remember, because I thought this is where price could bounce. So once that got broken and we didn't close above it, that was then the signal for me that price wanted to keep going lower.
Right.
And really, if you look at my setups here, what I've got, if I just zoom out, is these lows here have been broken. Let me just make that a little bit more attractive so it's not so. So for me, this is where price has been held up for an extended period of time. Once we've broken it, then we get a pattern like this. We kind of got a lot of red candles is the most basic way of putting it. We've got a bullish candle followed by more red. So that for me is an indication where a lot of selling's taken place, and this is where the continuation for moving further south would occur. So the way I learned was, and I don't know if it's true or not. There's no
many ways to skin a cat. Many ways, right?
But I think the way that people tell a story for why trading does this and why trading does that, it helps people visualize why they should enter at a certain zone. So my whole method of trading is very logical based. It's very simple. When you look at supply and demand, the narrative was that big institutions come to sort of an equilibrium. You've got a lot of buying and selling at this particular point in the chart. I'll just go down a level just so you can see a bit more of that consolidation. So at this point where price is sort of fighting, once all the buys have been used up and used for liquidity, price will shoot away south. So my whole idea basically is that when price returns here, there will be unfilled orders that remain from the lack of liquidity at this point. The quicker we move away from a level, the more out of balance the supply and demand is at that point.
Okay. Go ahead.
I was going to say it's kind of like jumping on the coattails of an institution. If an institution's put a huge sell order here that hasn't been filled, the indication from price is that there'll still be unfilled orders that will remain at this level. As a retail trader, I can jump in on that while their big sell orders move the market. And that's kind of like the way I look at it.
So being a supply demand trader, you probably, I'm not sure, I'm going to ask you, we're at the beginning of 2019 and you probably look at monthlies and weeklies and everything. What are you scanning for what could be great opportunities for the new year here? Or you just have to wait for levels to be taken out to tell you?
Yeah, basically. So, I mean, if we looked on the weekly here, for example, I'm on my laptop at the moment, so I've got the biggest of screens.
You're doing a great job.
Cheers. So for me, it's kind of looking at the overall direction of where price is going, what the trend is. At the moment, this isn't too conclusive on the weekly for me, but it looks like we've got a really big swing that just kind of wants to go back down to the origin of this move. So I'm quite bearish. Yeah. I mean, my friend is a programmer, and he basically, so one of my edges is having currency indexes. So it's like an average of
kind of like strength meter.
Sort of like the DXY chart.
Oh,
So you've got
okay.
USDX. So I've got coded sort of like average cross pairs against different currencies. So JPY against the majors like GBP, EUR,
Okay.
CAD, USD. So really, when I'm looking for a setup, I will see what, because remember, I mean, I think one of the things that people, or particularly new traders, don't realize is that, you know, big institutions buy currencies. They don't trade cross pairs, from what I know. So when I've got these currency indexes, I'll see which currencies are moving the most, and then narrow down the crosspair basically. But in terms of like overall forecast, I just kind of take what is coming. I don't really want to plan too far ahead in the future because I'll most likely get it wrong. So
Okay.
I mean,
Fair
like
enough.
on the weekly chart, I can see that this is a big area of demand, and it just looks to me like price wants to get down. So get down there. So I'm very much.
That would probably imply a note that the S&Ps haven't bottomed and there's another break to come. You know, I have to ask you. I was going to do it at the opening,
Okay.
but before you go, why the handle? Technical? Come on, buddy. Because I'll tell you something. That's what made me notice you, is because I would tell a joke that artists at times have to be so precise that they act like technical analysts. So I want to ask you, buddy, why your handle technical_anal?
It was yeah, it was the obvious wordplay, right? Technical_analyst was already taken. But
okay.
when I set my Twitter account up last year, I never thought I'd get more than like a couple of hundred followers, to be honest. And I thought a good way to get in notice is putting something stupid as my Twitter handle. And
it's not stupid. People are technically anal.
Yeah, I mean, some people don't actually get it.
Huh?
Yeah, no, absolutely no. It's I think in a way it's clever, but at the same time it's really stupid.
All right, so now this is for you and your associates. Maybe you want to show your website so that people that are interested, that have heard you live, you have a very nice following. I see, you know, many came in to hear you today. What's the best way for people to get in touch with you besides your Twitter handle @technicalanal? And you know, what's your business model? Do you mentor people? I believe you have a trading room. In fact, I think I have an interview scheduled with one of your associates, Trader Maine, in a month or so. So if you want to show that, that would be fine at this time.
I think we've actually, I'm not sure if the website is down at present because we're just going through, oh no, it's up, lovely. Okay. Yeah, we have a trading room where we basically, our focus is on education as opposed to giving out signals for trading. So basically we've been running for, I think we're in month 5 now, and I think we started off with about 50 to 70 members in our first month, and now we've grown up to nearly 250 to 300. I don't have the actual figures. Nice. But yeah, no, we basically focus on price action trading. The other 2 guys I work with, one of the handles is Scarface. He's been trading for near on 10 years. He's got a good background in stocks and commodities. And
I really didn't know that Al Pacino traded.
Yeah, I know. It's a funny old world, isn't it? The crypto Twitter, everyone with their anonymous handles and everything.
So is your website address www.bitcointradegroup.com? Is that it? .co. Okay.
That's right. Yeah, bitcointradegroup.co.
All right.
And then we've also got our Twitter handle is BitcoinTG @BitcoinTG. And on there, you can find all of our ideas of education. We do live trading as well, so obviously people can see the concepts in action. And I put some of my results up from my live trading over the past month, and Trader Maine does it as well. Scarface does it. So it's a nice little setup we've got going, and quite a lot of people are we've really shaped their trading lives, I guess, without sounding too big-headed about it. But you know, a lot of people, our main focus was the sort of the crypto space, and a lot of people come into crypto and don't really know where to look. And they will look at like the very basic chart patterns, which I don't think really help. So we've kind of, given them the sort of fundamental view on how charts work and how trading works. And I'd like to think we're doing quite well with turning people's trading accounts around.
All right. Well, I want to congratulate you and your partners on doing a great work, planting good seeds, helping traders. And I want to thank you, Mr. TA, for coming in today. It was really, I had a good time talking with you, and like it or not, you're now my trading warrior brother. And
I like it. Yeah, don't worry, I like it.
And I wish you success in your own account, and may your business grow like a mushroom, and have a great 2019, Mr. TA.
You too.
All right, everyone. You're very welcome, Mr. TA. Everyone, you could follow Mr. TA at technical_anal, and here's his website here, www.bitcointradegroup.co. See everyone for Turnaround Tuesday. Enjoy the rest of your day. Good hunting, and remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Adios. Thanks again, TA. Adios.
Cheers, buddy. Bye.